Annual pension allowance and annual pension carry forward allowance. These are probably two of the most fundamental and important things for your financial planning in the UK, or if you have a UK sourced income. If you're not aware of these and you're not maximizing these, and you could be maximizing these, you are really letting yourself down, in my professional opinion, on your financial planning. Okay, so annual pension allowance in the UK. The UK government in the previous tax year, 2023-2024, they increased this to £60,000 per annum. I would say that's pretty good. In the current tax year, 2024-2025, it's also remained at £60,000 per annum. What this means is, between your employer, your employee, and any personal contributions you make, you can top up £60,000 into your pension pot each year. Now, if you say you're 50 and you're planning to retire at 60, that's £600,000 that you could get into your retirement pot in the final 10 years of your career. Now, for most people, the final 10 years of their career is when they're earning the most amount of money. You did all the hard work in your 20s and 30s, probably didn't get paid very well. Now in your 50s, you're probably at the peak of your career. This is also an extremely efficient way to reduce potentially your inheritance tax bill. As we know, UK pension pots are not applicable to inheritance tax, so getting that money out of your estate and into pension pots can be extremely good financial and tax planning for you. Now, that's annual pension allowance. As I mentioned, it's extremely important to understand it's not £60,000 per pension. If you have an existing employer pension and you have a SIP, you cannot do 60k and 60k. You also cannot do 60k employer and 60k employee. No, it's £60,000 across all of your pension pots. Now, the majority of our clients obviously have a job in the UK and they're continuing to work. And of course, you have to have income in the UK before you can contribute £60,000. It's either £60,000 or 100% of your salary. So if you're earning £40,000 per annum in the UK, your annual allowance is actually the maximum of that, which is £40,000 in terms of personal contributions that you can make. So really important to be maximizing this if suitable and if appropriate for your financial planning. If you want to have a conversation with myself or one of our senior financial advisors, you can book in below via the calendar link. You can also reach out to me on dominic.murray@cjfinance.co.uk to begin a conversation and ensure you are matched with the most suitable financial advisor in the team. Now, the other side of the equation, annual pension carry forward allowance. This is a trick which is so underused and unknown in the United Kingdom. Pension annual carry forward allowance is effectively where the UK government says, all right, you didn't use your 3 previous years of pension annual contributions allowance, we're going to let them use them now on a rolling basis. This is very different from ISAs and JISAs. If you miss an ISA or if you miss a JISA, that's it. You can't go back and top up those contributions, whilst with annual pension carry forward you can. So this tax year, 2024-2025, £60,000. Previous tax year, 2023 to 2024, £60,000. Previous tax year, 2022-2023, was £40,000, and the final tax year that you could still get now, obviously this will change as years continue to go, is 2021 and 2022, which is also £40,000. So if you add that up, 60,000, 60,000, 40,000, 40,000, that's up to £200,000 that you could move from either a GIA or your bank account into an extremely tax efficient solution, which is a UK pension pot, free from capital gains tax and free from inheritance tax. Now, that scenario is probably unlikely because the majority of you are still continuing to work. That means your employer will be making contributions on your behalf automatically each month unless you've opted out of the workplace pension scheme, which very few people do. So, okay, you might not be able to get the full 200,000, but there will certainly be typically a large amount of money that you've not contributed. Here at Cameron James, our financial advisors will go back through your 3 or 4 year track record with your providers. We'll put together a recommendation report which highlights for you, based on the information from your schemes, what excess allowance you still have to be used from the previous 3 years, and obviously maximising this current tax year of £60,000. This is one of the fastest ways to help our clients build their retirement income, and also, as I keep harking on about, removing assets from inheritance tax. Now, if you're in your 40s, you might be thinking, inheritance tax, haven't got to worry about it. Worry about it now, because my clients are in their 60s and their 70s. They wish they spoke with me 20 years ago. I wasn't given advice. It's 14 years ago I started in the industry. I wasn't even given advice then. I was a relationship manager. But it's really important to act now. Don't wait until later. Be tax efficient right from the beginning. This is also, to go off piece a little bit, this is what's important with financial advisors. People look at financial advisors and say, oh no, I don't want to pay for that. I'll go and do everything myself. And it's like, yeah, but do you understand it? Are you doing this stuff year in, year out? Do you have a plan? Do you have a strategy? Do you even know what your employer contributions are? Do you even know as an employee what your maximum allowed contributions are from your employer contributions, which are then typically matched by your employer? These are all things that a financial advisor can help you maximize with each year, potentially in partnership with a tax advisor as well, if there's anything complicated or something you don't quite understand. Let me know in the comment section below any questions you have on this topic, but this is really one of the biggest secrets to maximize your pension planning in the United Kingdom. And as always, take care with UK pension assets.